insurance fraud is just as much of a fraud issue as it is a public safety issue. Now, with regards to auto insurance fraud, according to the Department of Insurance, over 1,400 auto and chiropractic referrals were submitted to the DOI for investigation in 2023. That's 1,400 referrals. NICB has seen questionable claims around PIP coverage increase 8% from 2022 through 2023. And during the first half of 2024, we're already past the halfway mark to surpass that. So when it comes to fraud or auto insurance fraud, one of the key areas that we're seeing this in is with personal injury protection coverage. That's that $10,000 that's used to pay for injuries caused or stemming from a vehicle accident. Fraudsters know this, and this is why they try to file as many claims as they can that are inflated. What I mean by inflated is they're exaggerated. The injuries, the treatments are exaggerated in order to draw down more payments, larger payments, up to that $10,000 limit. Oftentimes, these exaggerations are fabricated or outright fraudulent, and treatments are billed even though they were unwarranted or never performed. Now, over the years, fraudsters are becoming more and more sophisticated. They're getting smarter. And what we're seeing is complex criminal networks being created with medical clinics or chiropractic clinics at the center of it. And these clinics, they treat accident victims. Providers will coach accident victims about their PIP coverage, that they get $10,000, and that they should use all of that money in order to seek out treatments. So they're encouraging individuals to seek out treatments that, or more treatments that are necessary, and in some cases even treatments that could be, or that could pose a threat to the victim's long-term health. What complicates matters from a fraud fighting standpoint is when we're dealing with soft tissue injuries. It's easy to prove whether a broken bone is real or not, or some other catastrophic injury where you're laid up in a hospital bed. It's a lot harder to do so when we're dealing with soft tissue injuries like bruising, strains, or just pain in general. And fraudsters know this. This is why they try to submit as many soft tissue injury claims as possible, up into, again, that $10,000 limit. And I mentioned that they're getting smarter. Well, they're also getting bolder, these fraudsters. Specifically, they're now causing accidents that are generating these accident victims. They're causing these accidents in your communities. Fraudsters are using their personal vehicles to go out and strike unknowing motorists, or they're using runners and cappers, otherwise known as recruiters, to go out there and recruit individuals to take part in a staged accident scheme. Then these runners, these cappers, they steer the victims of those auto accidents to clinics within the criminal network so they can start charging and submitting those inflated bills. When it comes to staged vehicle accidents, fraudsters like to operate in urban areas because of the higher concentration of vehicles. They like to target wealthier communities due to the perception of more comprehensive coverage that vehicles there might have. They also like to target rental cars, commercial vehicles, and brand new vehicles due to the greater insurance coverage that these vehicles have. And unfortunately, fraudsters also like to target women and senior citizens because these victims are perceived to be less confrontational at the scene of an accident, and the fraudsters are more likely to be able to successfully carry out their schemes. And very quickly, I just want to highlight 4 common staged accident schemes that we see here at NICB. The first is the left-right curb drive down. Imagine you're at an intersection, 4-way stop sign, and somebody waves you through to make your left turn. And as you're making that left turn, they pull out in front of you and you end up striking the vehicle. There's the swoop and squat. I know that sounds like a funny name, but it involves multiple conspirators, each within their own personal vehicles, and they box in an unsuspecting motorist on a roadway, and the lead vehicle slams under brakes to initiate that rear-end collision. We have the co-conspirator scheme, where they try to pack as many co-conspirators in vehicles in order to be able to submit claims for each one of them. And then there's your rideshare fraud, which is the same as the co-conspirator scheme, except that instead of using personal vehicles, they're striking rideshare vehicles due to their commercial coverage. I want to quickly pivot as I wind down my comments over to the property insurance space. And one of the key trends that we're seeing there is around tree removal. I know that sounds silly, but imagine after a storm, a large tree topples over onto your yard, or worse yet, onto your neighbor's yard, and causes a property loss. What we see is tree removal companies, some of them even out of state, coming in, knocking on your door, providing you an estimate and signing a contract with you. Now that estimate has one number, but as soon as an insurance claim is filed, that number multiplies 3, 4, 5 times. And this is a common issue that we see, and not just in tree removals, but we see it with roofing fraud. We see it with predatory towing. The issue of inflated billing, the issue of exorbitant fees, charging services that were either unwarranted or charging for services that were never performed at all. And this is why I think there can be a legislative fix to this. We think there could be a legislative fix to this. And I want to direct everyone's attention to the PowerPoint slide, specifically that underlined section with KRS 304.47-020. That is the statute that contains the definition for a fraudulent insurance act. And we propose that definition be expanded to include the use of any estimate, invoice, or any other form of documentation that exaggerates the proof of loss or the cost of repairs associated with a property insurance claim. This will add transparency to a practice that's part of an unregulated industry and will help deter some of the inflated billing that we see. And more importantly, it'll help the good actors get paid. Weed out the bad actors and allow the good actors to be able to get paid more quickly. But most importantly, it will provide an important consumer protection. It will provide protections for individuals who are faced with signing a contract with an unscrupulous actor who might be trying to defraud them. And so I want to conclude by saying that when it comes to insurance fraud in Kentucky, it poses an economic risk to Kentuckians, as I've outlined with the tree removal example, but it also poses a risk to the health and safety, the lives of Kentuckians, particularly those who get caught up in unfortunate situations like a staged vehicle accident or who end up visiting unknowingly a medical clinic that's part of a larger criminal network. And so before I turn it back to Mr. Nolan, I just want to quickly thank you, Mr. Chairman, as well as the members of the committee here today for the opportunity to testify.
Thank you, Eric, for that information. The last slide we have here today is our organization and the business community still opposes third-party litigation funding. You've seen this slide before, so I'll be brief. But lawsuit loans are not legal in Kentucky, in our opinion. In 2019, a federal court voided a litigation funding arrangement in Kentucky as violating the Champerty and usury laws. We believe lawsuit loans hurt Kentuckians with predatory interest rates that drive up the cost of repayment, and studies have shown that litigation financing is correlated with distorted awards, longer cases, and greater legal expense. So with that, Mr. Chairman, thank you for giving us the time, and we can take any questions if there are any.
I do have a couple. Let's start with Representative McPherson.
So I was consulting my buddy Sarge Pollock here, that's evidently the expert today. But anyway, so, with the state of Kentucky now, in 1995, we implemented a thing when two people buy a piece of property, you sign an affidavit. Puts both people on record, puts the whole world on record that this is the value that was given for this piece of property. Is there anything we could do to get legislation where you would do the same thing with an estimate to say, put both people on record to say this is a true estimate, instead of somebody coming and saying, oh, we'll do it for this, but you just let us take care of the estimate because we're going to cover your deductible. If you got both people on record, then you could go after them legally to say that you signed an affidavit saying this was the true value.
It's definitely, thank you for the question, definitely something we can look into. And this all surrounds, it is what it is, which is just an estimate of the cost to repair it. Sometimes it changes a little bit. But Eric, do you have any comments to that?
No, I think that's a really interesting idea, because at the end of the day, one of the big issue that we're dealing with is the lack of transparency.
Correct.
And without that, because there is no regulatory oversight over this industry, or over the tree removal industry, over other industries, requiring that or making that a requirement and holding them to it could shed some light on some of the more nefarious activities that eventually turn into those inflated bills, those exorbitant fees which seem to happen as soon as an insurance claim is filed.
Correct. So I would just say it may not stop the person giving the bid, but it might definitely stop the property owner saying, I'm not going to participate. You know, I'm going to have to sign this. It's an affidavit and I'm going to have to sign it.
We have recently had a lot of issues with trees and the bills that were coming into insurance companies, and we have made complaints to the Department of Insurance about these inflated tree estimates that are in the not just tens of thousands of dollars, but upwards of six figures for various tree removals. And the commissioner has looked into it and done everything they can, turn the cases over to the Attorney General for prosecution. And so hopefully we'll see some action taken along those lines.
Thank you.
Representative Roberts.
Thank you. Thank you, gentlemen, for the presentation. Chris, would you mind going back to that slide about the 2024 legislative? And while you're getting there, I'll start by saying, if I may, that I just would like to reiterate what you said about this committee's relationship with NCOIL and how so many great things have started here and then become national models. And I won't be here next time, but I hope that we will continue to follow that tradition of working so closely with and that the opposite may be true, that if NCOIL makes a national model, say, of a mental health parity and substance use disorder bill in the coming months, that this committee might take that up in the future. And while I look at this list of things that we worked on here together, I'm really grateful to the two gentlemen for their part in many of these bills, but I also think we'd be remiss if we didn't thank some of the other people in the room who I know did some real work on this. Hope's here, Justin Miller's here, Anne-Marie Franklin's here. So, you know, I know a lot of these bills also have the fingerprints of Farm Bureau, State Farm, NAMIC, and some others on here. So just a moment to thank the entire industry for everything you've done to help educate the members of this committee up, because it's really complicated stuff, and to work with us. And I know some of those conversations are contentious because we are really trying to get at something that is workable for everyone, for customers and for the industry. So just a shout out and a moment of gratitude to everyone who's had a hand in this.
Representative Rudy.
Thank you, Mr. Chairman. First off, two points to follow up on what Representative Roberts just said right there. Yes, that was a very aggressive agenda, a lot of good things. Really proud of House Bill 15, and thank also of Representative Branscom's community this morning that I don't know, they lost a deputy sheriff in the line of duty yesterday. So certainly want to know that and note that as we think about Senator Turner, also that community in Russell County. This year's House Bill 15, our next session's House Bill 15, will probably be of great interest to this committee as well. It will, I'm told that it will likely be something that 15-year-olds are very interested in. So that might, just a FYI, some people are interested in what 2025's House Bill 15 would be. But I want to follow up, Mr. Chairman, if I can, on the distracted driving thing that Mr. Nolan discussed here. You said you don't want to make it a crime to text and drive. I would like to point out, and I want to know what changes we're going to make, considering that KRS 189-292 already makes it illegal to text and drive. I don't want anybody to leave this room thinking that it is not already illegal to text and drive. Also, 189-294, if you're under the age of 18, you cannot talk on a cell phone unless it is hands-free. Already the law. And I think a lot of the things that you encompass and we talk about distracted driving is really summed up in 189-290 that deals with operating a vehicle. You must drive carefully. We already have laws on the books. So what changes? You say you don't want to make it a crime. So is it just hands-free that we're now looking at for all people and not just under the age of 18? Or are we going to do some changes to the texting as well?
Yes, thank you for the question, Leader Rudy. Yes, would like to make changes to it. And when I said earlier a crime, I had it in quotes in writing, and I should have put my air quotes on because it does have a fine associated with it. But the General Assembly first passed the texting while driving prohibition in our law some 14 years ago in 2010. And you can imagine how technology has changed over those 14 years. Cell phones didn't quite look like what they do today 14 years ago. They were similar, but they've gotten much more capabilities in it. But the current law basically says you can't write, send, or read a text-based communication with any person. And that text-based communication does include text messages, instant messages, and email messages. But it's just texting, and it's with a person. It doesn't address video games or watching movies or doing video conference calls, taking photos, and all that sort of stuff that we all do with our phones now, and a lot of people do while driving their phones. So while we do have a law on the books, it's only a $25 fine for the first offense and then $50 fine for every other offense. And obviously, the statutes that you cited do have generalized laws. I think it was 290 that basically say you have to operate safely on a roadway. But what we have found with other states that more narrowly define a hands-free use of your phone, a single touch only, and going hands-free with the cell phone has been shown to be effective. I think Ohio passed their law last year. They've already had an 8% reduction in distracted driving incidents on their roads. So we can go state to state and you can show, but that's mainly what we're looking at doing, is expanding our definition that we have right now for texting to define personal communication devices as portable that include a tablet that didn't exist back in 2010, the laptops, notebook computers, digital assistants, and obviously telephones and things like that. And then going into what uses you can and can't do. So it's just a couple of pages of additional lines in our statute that would further define the technology as it exists today, until such time as, Leader Rudy, you've pointed out, that technology will get to where it can block your phone, your car and your phone work well together, and the manufacturers can put information into the phones and the cars that would help prevent some of that. But we're not quite there yet. So I hope that answers your question.
Thank you. It does, and I think the technology will. We have to deal with the short term, but I think long term we're going to. The industry, our technology itself will take care of it. I would question whether or not changing the habits of seatbelts dealt with the fact that used to the seatbelt things just dinged once, and now it dings every 5 seconds. I think that would change the habits as much as any laws. But to follow up on, and I want to stress this on 189-290, and you talked about highway zone, construction, safety, and all that stuff too. Yes. Subsection 3 and 4 that deal specifically with work zone, highway work zone. And then you look down at the penalties in subsection 5. We can add more penalties to work zone safety. But if you violate work zone safety, and all these things you're talking about are a violation, you're putting the workers at risk, you are subject to losing your driver's license already. That's a pretty, you can find somebody all day long if you take away their driver's license. So, I think we already have some mechanisms in place that just aren't being enforced right now, because I don't know anybody that's lost their driver's license for driving recklessly through a work zone, but they can be if we would already go after what's already in place. Thank you, Mr. Chairman.
Representative Rudy, you mentioned the prospective House Bill 15 for 2025. I hear that bill may have an uncodified name. Is that correct?
We're just trying to make Representative Bowling popular since his dad made him unpopular. It's all it's about.
Thank you, Mr. Leader. Representative Duval.
Thank you, Mr. Chair. So we have state boards that oversee our healthcare providers, and what is their role right now in investigating some of these schemes that you discussed?
Most of the investigations, and Eric, please chime in here, are done by the Department of Insurance. They have a fraud unit that is aggressively investigates all the complaints that are made and things like that. just like we talked about enforcement of the texting law on the books today, we do have an enforcement issue with when it comes to fraud, and it's hard to get it through the system to get prosecutors to actually take the cases and prosecute them to the full extent of the law. They have a lot on their plate, but we have over the years met with prosecutors, especially in our urban areas, and tried to put together small task forces to make sure that not only when we find and cite people for this type of fraud activity, that it is prosecuted. And that is a kind of a stumbling block. But Eric.
Yeah, I would agree with the enforcement piece, but also, as I had mentioned earlier, there are loopholes that certain unscrupulous providers can exploit, such as, for example, the soft tissue injury argument. If your patient is telling you that they're in pain, again, that's hard to measure, so to speak. But if the incentive is there to continue to apply treatments in order to max out that PIP coverage, I mean, technically, that's very hard to determine whether that soft tissue injury, whether that pain is fraudulent or not.
If I may follow up. So, are there any communications with the state boards on these situations? Because, the state boards can remove license of providers that are participating in these schemes. So, has that avenue been searched out?
That's a good question.
I believe the Department of Insurance would make referrals to those boards if you found various providers that are abusing the system. But we will definitely bring that up. We have an active fraud task force that I run on a quarterly basis, and would definitely bring that up on our next call. And I would also add that our PIP laws are decades old, and the courts have interpreted them over the years in a very broad manner. So it's in essence $10,000 of mostly medical coverage. It can do wage replacement, but when you put a dollar number, which we're thankful that it does have a cap, that is $10,000. It's like free money that can be used. And the courts have said that our insurance companies cannot question a bill, and we have to pay every bill. So if you're in an accident and hurt your back, and that's all that you hurt, and then you submit a bill for treatment of your foot, we have to pay it, and we can't question it. And those are the types of things that we would like to change in the state law. But it's not without controversy, and it's not without folks on the other side that say you make that change and insurance companies can start being more provide more scrutiny of those bills and what effect that could have. So active conversations.
And if I may add, so NICB runs a medical fraud task force in the Louisville metro area. And so I'd love to follow up with you, Representative, with some additional details on some of the questions that you had asked regarding the relationship or the involvement of some of the state boards, in particular with certain providers that are being flagged as being part of these criminal networks.
Representative Smith.
Thank you, Mr. Chairman. Chris, I'll be real quick. I just had a visit a couple of months ago from an insurance agent that said there was an uptick in uninsured vehicles, uninsured motorists in our area. He wanted me to look into what we could do, and he gave me the example of going and buying 30 days of insurance, getting their sticker to put on their vehicle that carries for 12 months. Is your organization looking at anything that could help as far as when you purchase insurance to get your registration, maybe having to have purchased for 12 months so it would carry for what the sticker says that being insured? And then a follow-up, if you could, is electric vehicles any more expensive to insure than our fossil fuel vehicles? Are you seeing an uptick in cost in electric vehicles? So those two questions.
Chris, if I might, Representative Smith, I have a draft related to uninsured coverage and real-time insurance that I am reviewing currently, trying to get something done on as we speak. So that is in process, and I'll defer to Chris for the second question.
Thank you for both those questions and for that response. Yeah, your first question, that is an ongoing problem of people purchasing insurance just to get the registration, then canceling it. And that has been a problem for decades. And real-time insurance verification will help with that. but that requires the transportation cabinet to have an electronic system in place that can be pinged by law enforcement and others to make sure that insurance is in place. Transportation cabinet has their hands full currently with some electronic changes they're making, so hopefully we'll be able to work with them and Representative Chairman Meredith on a piece of legislation that would put that into place. On electric vehicles, I don't know that we've seen anything in particular related to electric vehicles, but overall, the more complex a vehicle gets, the more expensive it is to fix. So most of us are now driving cars with all sorts of sensors. They have the backup cameras. They have various sensors. They've got sensors that tell you when a car is next to you. They've got sensors that can slow you down, and just more electronics in the car and more pieces that can break. It's more expensive to fix. So we're seeing that overall. I don't know if we're seeing it necessarily in the electric vehicle space in particular, but that is more complex. So fixing those cars will be more expensive. But they don't, yeah, I'll just end it there.
Representative Smith, I will also refer to some national articles that I have read on that issue. Many times, some of those electric vehicles do have a higher cost to repair. There are some insurance companies in some states, I don't know about the status here in Kentucky, but are not covering those vehicles in other states. I know some of those electronic vehicle companies have created their own insurance, but there's some questions about how viable those insurance coverages are as well. We'll be watching that. I don't think any of them have tried for licensing in Kentucky at this point in time with their direct lines of insurance through the brands. But as Chris said, the cost of components is much more expensive. I had a squirrel chew up 3 wiring harnesses on my truck while we were in Frankfurt last year, and that was $900 just to replace the wiring. So those component parts are much more expensive, whether it's an accident or whether it's just a repair. Representative Pollack may want to ask a question, may want to have a comment, may not. He's gone back and forth. We'll see what he's going to do now.
Okay. So now, obviously, Leader Rudy stole my thunder there on his question, but my comment is, Mr. Chair, and thank you for this opportunity, is to echo Representative Roberts' comments on the people in this room. I also want to add Ms. Jessica Sharp, our bill drafter, but also Representative Roberts, thank you for the service and representing the state of Kentucky at the NCOIL level and what you've done over those years there, and we continue what's going on at the NCOIL level. And so, again, we've talked a little bit about our consumer protective legislation, and that's super, super important in our industry. And so, and then also I want to go on record, Mr. Chair, that I am considering House Bill 15 as a co-sponsor to Leader Rudy's comments, but as long as he would consider co-sponsoring the new and improved distracted driving bill that's coming this next session. Thank you, Mr. Chair.
I don't want to speak for Representative Rudy, but I think he may decline your request, Representative. Representative Bray.
Thank you, Mr. Chairman. Just quick question. So we know that insurance premiums are on the rise along with everything else. Do you all have any estimates on what the cost in Kentucky is for the fraudulent actions that you've been talking about, kind of as a percentage, just ballpark, rough idea?
So it's unfortunately we do not have that data available to us. The best that we have at the moment are some of the national figures. Again, citing that FBI figure, the basically $4,000 to $7,000 over a 10-year period, and then there's another figure out there which is over $300 billion. That's from the Coalition Against Insurance Fraud, and that's looking at across all lines insurance fraud's cost to the country. But as far as Kentucky is concerned, and specifically the cost of Kentucky, we don't have that data, unfortunately. That's not something that we collect in order to calculate that. But I will say that other states have been asking that very same question, and we're hopeful that in the next few years that we'll as states have a better inclination on how to best calculate that number, we should be able to get a better understanding how insurance fraud is impacting our communities here in Kentucky.
I mean, just and then a brief statement. Often we think of insurance fraud as kind of a victimless crime, right? And I think that's why you've got such a reluctancy to prosecute this in some jurisdictions. But the fact of the matter is, every time this goes on, it affects Kentuckians' premiums, and it's just like another tax that we're having to pay because prosecutors won't do their job. Thank you, Mr. Chairman.
Senator Douglas.
Thank you, Mr. Chairman. Mr. DeCampos, as well as Chris, I want to thank you both for bringing these things to light, actually verbalizing these, having the guts to verbalize these things. With that being said, I have just a few comments I want to talk about. You mentioned providers coaching victims in the PIP space, and I think you really hit the nail on the head. One of the things I think, however, we also need to verbalize is whether those providers are MDs or whether those providers are in the legal space. We don't talk about that. We don't want to we want to make sure we don't get out of this room without doing so. So part of what we're really talking about here is whether part of the system abuse that is going on or allowed to continue to go on is because we need substantive tort reform here in the Commonwealth of Kentucky. There's no doubt about that. Physicians are often faced with patient complaints that are very, 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 very inconsistent with examinations, and I know a lot of docs who make that comment, or they tell the patients that, and then the patients go to other physicians who do just as you are mentioning, but they get that motivation not from the physician; it's coming from elsewhere. So maybe one of the things we need to look at in the future, which may scare some folks, is that we actually have a constitutional right in the legal space, but we don't have a constitutional right in the medical space, and most people don't really know that. Yet we have managed health care, but we don't have managed legal representation. So maybe those are some words we need to start considering down the road. Thank you, Mr. Chair.
Representative Gooch.
Thank you, Mr. Chairman. Chris, as you know, I've been working ever since I've been here pretty much on trying to get some changes to the PIP law. And we've had a couple of successes, but nothing that would really go after the core issue, which is that any bill presented would be presumed reasonable. And that certainly opens the door for fraud, but if not fraud, it allows abuse in a lot of situations. But back to PIP, you mentioned that most people have just $10,000, which is basic, and there's a $10,000 cap. But you can, and I actually encourage people to buy more. And I'll buy $20,000 or $30,000 at least, because it's just more coverage that you would have. But when we talk about some of these fraudsters out there, are they in any way encouraging people to purchase more PIP? You would think if they're that sophisticated, they would in fact be doing that, or before the accident. Have you seen that in any situation?
I can't say that I have seen that. I would like to follow up with you to see if some of our agents in the field, NICB agents in the field, have seen cases where they are encouraging that. But most often what we end up seeing is this type of scheme is taking place after the accident has already occurred and that policy is already locked in. And when they walk through those doors, one of the very first things they'll tell you is, hey, you probably should have PIP coverage. So then I can already tell you have $10,000 to play with, and let's start charging. And then at the end of the day, what we see are situations where innocent people have racked up their PIP coverage, their $10,000. They didn't get the quality treatments that they needed. They just got whatever that unscrupulous. It's important for me to qualify that unscrupulous provider, has been charging. And then they're out the door still needing treatment, but now they don't have their PIP coverage money anymore when they go see a legitimate provider to seek that out. So that is an issue. That is the common scheme that we see.
Final question for this group, Senator Storm.
Thank you, Mr. Chairman. I was just curious. We've talked a lot about PIP and the cap of PIP being $10,000. Just so the committee's clear, how long has the cap been $10,000 in Kentucky?
Since it originated, and I'm going to look at Jessica, 70s? 77, Representative Gooch.
Thank you.
So,
Thank you all very much.
thank you.
Thank you.
Now, if we could have Commissioner Gibson come to the table. If you would, please introduce yourself for the record, Commissioner. And it is a pleasure to have you here officially as Commissioner, I think, for the first time before the committee. And then after you introduce yourself, Commissioner, I am willing to give you leeway on whether you would like to do the reg first or your presentation, whichever one you would like to do.
Thank you. Excuse me. Thank you. So I'm Marnie Gibson. I am, yes, officially the commissioner of the department. Thank you, Chairman Meredith and Chairman Carpenter, for inviting me today to speak. And I'm happy to provide an update on the Department of Financial Institutions. I think we probably just go ahead and do the regulation first, if that's okay. I'm really indifferent.
So we do have a reg that has been referred to us for a small amendment. That is the next item on our agenda. Those have been previously provided to all the committee members with a summary as well. Would you like to give just a brief explanation of the changes, Commissioner?
Sure. So there were actually two changes. So the Legislative Research Commission staff does a very good job of thoroughly reviewing the regs and making additional changes if necessary. One of those was to remove the term broker-dealer, and it was inadvertently removed in two places, and so we are actually putting that back in the section that involves agents, because we do have issuer agents as well as broker-dealer agents. And the second is a technical change that LRC staff did catch. I believe it's in a citation, and it was just a misnumbering. So they're going to take care of both of those at once, and then that should be the only change. It's very basic and essentially technical.
Any questions from members of the committee about those amendments to the reg? Seeing no questions, do I hear a motion to approve the reg as amended? Got a motion from Representative McPherson, a second from Senator Douglas. All those in favor say aye. Aye. Any opposed? The amendments to the reg have been approved.
Thank you very much. Now for the fun part. So we get to do the annual update. So obviously banking is one of our prominent areas, and most of you know us as a banking regulator only, but we do actually regulate 3 separate areas. So in my update, I will touch on all of these areas, and then I'll be happy to take questions at the end. So first thing would be our, let's talk about just our general, the banks that we have here in Kentucky. So as you are all aware, because I think most of you have seen this presentation for many years, so our banks do continue to decline. You can see that that is starting to slow down just a little bit, and we actually only lost 2 charters last year, so we are at 99. Number of banks under 100 million is declining and does continue to decline. And that's probably one of the more negative comments that I would make today, as a lot of the smaller institutions are really merging into larger institutions. But on a positive note, if you look at total assets, you can see the assets have continued to increase. So despite a loss in the number of institutions as well as the number of smaller banks, those assets are staying in Kentucky, and they're actually growing as well. So that's definitely a positive. And that trend has continued for some time. And that's one of my favorite things to talk about, is that while we do lose institutions, the money and the dollars do stay here under our state chartered institutions. Same thing with loans. While there was a brief uptick in 2020 and then another decrease in 2021, and I'm sure most of you can guess what was happening at that time. So we'll just kind of, except for that part, we'll just ignore that. Other than that, we have a constant increase in the number of loans as well, which just shows which just shows the positivity and the impact on Kentucky citizens. And Kentucky banks by asset size. This is just a chart just to help you see a little bit better. Sometimes a visual format is a little better than a lot of numbers and typically a little less boring. So I'm going to show you this here. So the very top line in that light green is the number of charters, and you can see the decline. So I started with the division, with the department in about, gosh, it's been almost 16 years now, and the number of institutions we had was so much greater, and you can see just that decline. But again, it is starting to trend positive, and that it is starting to kind of level off a little bit, and we have had interest in potential conversions over the years, so some of those have actually been conversions to state charters as well. So this is not completely everyone leaving. We are gaining some, and it's just kind of the ebb and flow. If you look at the number of institutions that the less than 100 million is obviously decreasing, as we just talked about, but we do have some larger banks as well. And if you just are interested in a size, our smallest institution is about 26 million, and our largest is about 7.5 billion. So we do have a wide range here in Kentucky. All of those are considered community banks, as they do fall under that $10 billion threshold. And bank performance, this is one of my favorite charts that I do get to talk about. This just compares Kentucky to kind of the surrounding states in our region, as well as on a national level. So I won't go into a lot of detail on the specifics, as again, you can see the numbers for yourself. Kentucky's kind of there in the middle in terms of the number of institutions. But what this chart tells me as a regulator is that our Kentucky banks are doing well. They are very protective in terms of their capital. And if you check the last column there under the Tier 1 leverage capital ratio, we are number one. We are typically number one. And there have only been a few times that I've been able to do this presentation or view this presentation when we are not first in that area. And that translates into a protection of capital, which is what we want for our Kentucky citizens. So again, Kentucky banks are doing well, and this chart does demonstrate that. And while you can dig into the numbers a little bit more, just that would be the overall synopsis that I would take from this chart. This is just a spread out version of just the bank performance. Sometimes, again, a little easier to see on a graphic. And that's just really the numbers from the other page that I showed you. And if you look at the Tier 1 leverage, which is the little line, while it does decrease, if you compare this to a national average, again, Kentucky is well in the top. And a lot of that has to do with interest rate issues and some of the other ongoing larger economic issues. And if you look at a national average, again, Kentucky is doing so well and so much better. So we also regulate credit unions. So if you look at the numbers there, credit unions have remained pretty, I don't want to say stagnant, that's probably not the best word choice, but they've remained pretty consistent. So we are at 18 right now. The number under 100 million is 11, and that's pretty textbook for some of our smaller credit unions. Total assets, again, with that exception of a couple years there, we're pretty much seeing the assets continue to increase despite some loss in charters, as well as loans. So credit union loans have gone up, and they are about at the highest number they have been. So you can see there at the end of the chart again, same, our credit unions are doing well, and they are serving our Kentucky citizens. And again, visual, just like on the other chart, shows you a little bit of kind of the spread out, how everything works. Credit unions tend to be more kind of centralized in that middle dollar range. We do only have one institution now that is over $1 billion. Credit union performance. Generally, you can say the same thing. It's a little skewed here. West Virginia only has 3 credit unions, so they are the number one in all areas, so we can just kind of maybe scratch a line through that. And once you do that, you can see that Kentucky, again, is about average, consistent. We have a smaller number of credit unions compared to some of our surrounding states. I guess we are second to last in numbers. But again, same thing. Net worth ratio, a return on average assets, and the net interest margin are all kind of in the middle area, median area. And I will say most of our credit unions do rank in the top in terms of asset quality. So again, safety and soundness. And then I want to talk a little bit about our examinations and where we're actually spending our time and what we're doing. So in 2023, we did do 33 safety and soundness exams. And while that seems like it's gone down, it really just depends on cycle. We take a risk-based approach and we visit institutions as appropriate. We also work with our federal counterparts. Visits tend to have higher visits when there are more concerns and you kind of jump in between the regular exam cycle. We only had 3 visits right there, so that should tell you kind of where we are in terms of our banks are doing well. IT exams, that's always something that we tend to focus on, and we've tried to put more resources into that area. It is a little bit difficult because at the end of the day, safety and soundness has to come first. And then after that, we try to catch those IT as well. Same thing with credit unions. Again, depends on cycle. And when you lose a few, that's really just kind of the numbers and where they landed. Same thing with visits. In 2020, you can see there were 10 off-site visits and reviews. That's gone down to 3 in the last year. And then trust companies will likely, unless we lose one, trust companies will always rotate between 1 and 3 every other year. So this year we will probably have 1. And so we do, there are 4 state chartered trust companies. And just briefly want to touch on a few depository initiatives. The first of those is the banking modernization, which you all are probably all well aware of. So thank you to Chairman Meredith for his work on bringing that bill to, it actually probably rallies the 1970s there. We've had those statutes in place a very, very long time. And we have now modernized statutes that you can actually look at and are easy to read and understand. Quite a few changes were made, so I really just want to thank Chairman Meredith as well as others in the room and Jessica as well for helping draft all those. And so we are in a place now where we can refer to those statutes, and they are readable. Lots of good changes were made on that. So with that, the trust regulation update just involves one thing that came out of that modernization bill. We did file a regulation on the trust updates, which essentially creates a way for those out-of-state trust companies to file in Kentucky. Creates really something that came out of discussions from that. That regulation is in process right now, and I believe the comment period will end at the end of this month. Now we can talk about securities, which is the second of our 3rd areas. So I only go back 3 years on these. So if you look at licensing and registration, broker-dealer registrations have remained about the same. The one area that I would focus on this chart is broker-dealer and issuer agents registrations. So broker-dealer agents have increased and continue to increase. Over 15,000 a few years ago, 170,000 at the end of this year. So you can see that's about another 10,000 increase in numbers. So the securities industry is strong in Kentucky. Same thing, investment advisors and representatives. We've added an extra 300. We call them IARs for short, so IARs in 2023. These numbers do continue to increase as more people are entering the securities industry. In licensing and registration, again, really what I want to talk about here is a strong economy and strong economics in Kentucky. So all these are different types of registrations or exemptions, and I won't bore you to death and go into details of every single one, but what you can see is these are still happening here, they're filing here. If you look at the number of Reg D offerings, those did go down, but that is because some of those were consolidated and there were some other new exemptions that had been offered, and so that's why those have changed a little bit, but I do expect that number to probably go up again in 2024 as well. For compliance exams, we did not do broker-dealer exams in the last calendar year, and the reason for that is because we ended up focusing most of our time on investment advisor exams. FINRA dually regulates broker-dealers, so they do get some touch points with FINRA, but we are the only ones that regulate state-registered investment advisors. And so when we have a smaller number of resources, then we do have to focus those on our IAs. We are looking to ramp up that program again this year and do some more broker-dealer exams. And to add to that as well, we only have a few home offices for broker-dealers in Kentucky, so those would all be branch exams anyway. So just to let you know what's happening there. And enforcement actions, we did have 1 enforcement action come out of a compliance exam in 2023. And speaking of enforcement, so we had 31 referrals that came in. A new number of investigations were 19. Pending is 48. And to give you some clarity on those numbers, those are investigations that can be open and closed and new ones. So that is not the same 45 investigations that haven't been touched in 3 years. Those are very ebb and flow, coming in, coming out. We did have a little over $1 million in fines, but those were due to very large multi-state cases. And restitution, you can see, was ordered. Restitution really just depends, again, on the ebb or the flow of the case. And it looks like we had almost $9 million that was ordered in 2023. And we do have 3 current law enforcement investigations open as well. And we've had a few convictions in the last few years. And for securities initiatives, we have two. One of those we actually touched on today during the reg. So that was our exam validity extension program. This is a program that allows us to work essentially with FINRA and allow what we call an examination extension. So as we all know, and we learned from COVID, many of us sometimes might need to leave our jobs for a little bit longer than a few years, and maybe there's a longer period, whether you're taking care of a parent, a child, or you have a medical issue. This program takes what would normally be an expiring exam and registration in 2 years and extends that to 5 years. So it allows you to have, and that's the FINRA side, and so we are extending that on the state side as well. That's what this initiative is. There's a national model rule for that, and only a few states have adopted it yet. We wanted to be an early adopter of this because it really does allow those that do need to take an extended absence from the industry not to have to retake those exams. And if you know anything about those exams, they're very complex, they're very difficult to pass. And as long as you keep up with your continuing education, then you can return to the industry within a shorter amount of time rather than retake everything and start all over again. And then lastly, the Investment Advisor Representative Continuing Education Program. This is something that we enacted a few years ago. It has now been in place, and I am pleased to say that we did not have any investment advisor representatives that lost their licensure or registration this year. Everyone did complete CE. And then non-depository institutions. So this is the area that is the most widespread. It covers 5 essential different categories, as well as a 6th that we have just undertaken. Mortgage companies, loan originators, consumer loans, deferred deposit money transmitters, and student loan servicing. We are just implementing student loan servicing, so that is why it's not shown on this chart yet. And generally, there's been a little bit of decline from 2022 to 2023, with the exception of money transmitters, and those have increased, as well as you'll see in exams in that area also. So 90 exams of mortgage companies in 2023 compared to 88, so slightly higher. And mortgage brokers, we have increased those exams as well. So we are starting to get back out in the field. And a lot of that was kind of COVID spillover, where we were very careful in going out to exams for safety reasons. So we are starting to ramp that back up again now, or at least in 2023, and continuing that trend in 2024. Exams completed. So we have the consumer and industrial loan exams, 219 down a little bit. Deferred deposit, that stays right around 250 or so every year. And I mentioned money transmitters earlier. That number has increased because the number of money transmitters and the complexity of those institutions have increased significantly in Kentucky. So we're doing a lot more exams on that side. Consumer protection complaints. And really, whenever you see a slight downturn in economy, you tend to see more complaints come out of that. I see lots of head nods. So that's what a lot of these are. As we started to come out of COVID and the COVID money started to lapse, we started to see more complaints in these areas. A lot of those did involve other and general scams. So those didn't necessarily fall into those, but we do get complaints on everything, and they do get lumped into there even if we don't have that jurisdiction. Fines are pretty much, again, just based on cases, and they're usually very minimal, so we're looking at under $50,000 in fines there. So that is generally going to be the update that I have to provide. I've tagged kind of our information there, and if you have any questions that you don't want to ask today, I'm more than happy to speak to those, or if you have any questions or just need help in this area, or your constituents do, please reach out to us. And with that, I'm happy to answer any questions, and thank you for your time today.
Thank you, Commissioner Gibson. I do have one real quick question. Back in your security slides, the compliance and the enforcement slides, says one enforcement action under the compliance slide, but then you go over to the enforcement slide and the 11 administrative orders, and I know you spoke a little bit to the national fines that came in. Could you just kind of explain the difference between the one enforcement action on the compliance slide and the multiple over on the enforcement
Sure.
slide?
So on the compliance side, those would be actions that came directly out of a compliance exam. So in other words, we found an issue while on an exam and we took an action based upon that issue. The other enforcement actions came from a variety of areas. Those were likely from complaints or something that we noticed ourselves when just reviewing something, because you'd be back in the old days, we used to look at the newspaper. You know, we don't think we do that anymore, but something along those lines where we might catch that. And some of those are from multi-state actions where we worked with surrounding states or other groups of states, and we were able to take actions on those. So they really come from 3 or 4 different areas, and complaints are a big part of those actions as well. So that's why we're happy to take complaints, because sometimes, we just can't know everything that's happening. So the more information that consumers share with us, the better, and we can move forward with those.
Thank you. Any other questions, members of the committee? Representative Smith?
Thank you, Mr. Chairman. Just real quick, I know time's strained. In all your presentation, and I'm sure there's maybe no reason to do it, but is crypto an issue inside your department right now? And I've made this statement last year and the year before. You can go into a C-store and there's crypto exchange inside C-stores. What is your stance on it, and what is your future or your discussions within your cabinet on with this? Because I don't have a crystal ball, but I would say there's a lot of assets in Kentucky that's been converted from cash in banks to cryptocurrency, and you're shaking your head like you know that. So what is the cabinet stance as of today on the crypto market?
So I can't necessarily speak to the stance, but I can tell you what we're seeing and what's happening. So we do see a lot of those cases that I mentioned do involve what we call pig butchering scams, or preferably we are trying to change the term to relationship scams. So a lot of times that money is indeed sent through an ATM. There are various other ways that does happen. So we are aware of that. We know how it's happening. Parts of it do fall under our money transmitter jurisdiction. That is something that we are looking at, and I can just say that's something that we're evaluating right now to determine how to best protect Kentuckians going forward. So I don't really have a good answer for that yet, but I can tell you we are aware of it, and that cryptocurrency pretty much touches some of every single area that we do regulate.
Any other questions? Seeing no other questions, I will make an announcement that our next meeting will be held on October the 15th, same time, same place. Chairman Carpenter will be leading that meeting, so be here for that. Commissioner Gibson, thank you for being here. Do I have a motion to adjourn? Motion? Second? All those in favor of adjourning